Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, we are going to look at two large cap auto companies because now we've just seen that the new GST rule has come out. And according to the GST rule, basically small cars, bikes, and other cars are now going to get slightly more affordable. And that is why auto companies in India, at least for the next 2 years, should do really well. So today, let's quickly deep dive into two interesting companies. What are their growth triggers? What are the future antitheses that they might have? And will they do really well in the future? So we will understand all of this in today's video. So let's quickly jump into it. Also guys, before we start the video, I want to give a big shout out to Grow for sponsoring this channel so that we are now a part of the Grow network. And this has helped us increase our team and also improve the quality of our research. So again, a big thanks to them. Now, the first company that we are going to look at is Eicher Motors, right? This company does two things. One, it sells the famous Royal Enfield Bullet bikes. And number two, it is also in commercial vehicle segment. In fact, it is doing really well in the commercial vehicle segment, and they've also started launching electric vehicles in that segment as well. So today, let's quickly deep dive into one of the two companies that we will talk about that also has very good triggers in the future, right? Now, recently, if you look at Eicher Motors, they have now done a JV agreement recently with a software company, and they also have started setting up a CKD assembly unit in Nepal and Bangladesh. Now, you might be like, Shashank, why Nepal and Bangladesh? That is because this company has now started expanding very well. Already they were expanded in a very long period of time, but now they have gone slightly ahead with the expansion, and we will talk about that in detail. Now, if you look at the company, again, if you look at this slide, the group structure is very similar. Promoter group owns 49% of this company, 26 is with FIIs, 15% is with DIIs, and the rest is with others. Out of this, they have two businesses, as I told you. One is their Royal Enfield business, which is in Brazil, UK, Europe, North America, Canada, a lot of places. The second is a 50-50, almost 50-50 JV with Volvo International, right? And this is to make the Volvo HR commercial vehicles segment. So that is basically what they do. Now, if you look at the Royal Enfield segment, before I go into all the growth triggers as well, let me show you something very interesting, right? This is their product portfolio for all the bikes. And here, if you see, their 350 segment has a lot of bikes and also sells a lot. For example, their Bullet 350 was something that even I had at one point, and it was very, very, very good, right? Wo feel aata hai when you drive a Bullet. And apart from that, their adventure bike, which is the Himalayan 450, also started doing really well, with a lot of people in India now adopting biking as a hobby as well, right? So again, their product portfolio is quite expansive and quite amazing. And if you look at their current market share in the domestic motorcycle space, they currently have approximately 31% market share above 125cc motorcycles. Okay, they are very, very, very good when it comes to it. And more than anything, it's about brand loyalty when it comes to this company, right? Now, if you look at their international business, and this is something that I want you to look at very closely because it is mind-blowing. In FY17, okay, 8 years ago, they had 217 crores coming from the international business. Today, in FY25, they have 2,500 crores coming from the international business, which is a 10 times jump in international export orders in the last 8 years, which is just unbelievable, right? Now, if you thought this was unbelievable, let me show you more unbelievable stuff also. This was just one unbelievable stuff. Now, do you know that most of the people who go and buy a Royal Enfield bike don't just stop there? They go one step ahead and they start buying the jackets, helmets, gloves, and all of that. You might have seen. So that comes under non-motorcycling business revenue. And again, here, get ready to be shocked. In FY17, that revenue was 579 crores. And today it is 2,700 crores coming from non-motorcycle business. This includes spare parts, services, accessories, and apparel, which is just mind-blowing, right? So this is the kind of revenue and scale that they're looking at. And they are now launching more bikes. So before I go into it, let me show you what they're doing as well. Look at the business segments. So they have premium motorcycles and they have VECV, right? A Royal Enfield share is 42% of revenue comes from Royal Enfield, and 57 actually comes from the Volvo partnership that they have. Now, if you look at Royal Enfield, they have 6 new models that they have launched in FY25, and these target both urban and adventure because in India, both of this is expanding. They also have more 650cc variants compared to its peers, which again makes it stand out from the public. And this makes it very, very, very interesting for this company as well. Now, if you look at their Volvo electric business, which is almost, as you know, 57% of their current revenue right now, that is also expanding a lot. So their VECV financial highlights for Q1 FY26, you can see that it has gone up almost 10% from a quarter-on-quarter basis. The EBITDA margin has also gone up to 9%. And this is something that is growing in India a lot. and growing internationally as well. So this is where they're also tapping into the game right now. Now, one more thing that has recently come up, which I don't know, might be an antithesis, but if you guys have seen this, Royal Enfield is now launching an electric bike called the Flying Flea. Okay. Now, this is something that they're planning to launch very soon, which is going to be a electric Royal Enfield bike. Now, again, I have had a Royal Enfield bike, and the feel of that bike was that sound and that feel that you get when you sit. So I'm not sure how Royal Enfield going into electric. Again, I've been wrong multiple times in the past with respect to electric, but I don't know how Royal Enfield and electric will actually fit, because they want to be ready for the future of electric, right? So that is something that they're coming out. But again, I don't think it's core to their business as of today. But again, we can be completely wrong with what we think right now, right? Let's quickly look at the result. So if you look at the result analysis over here, you will see that the stock has been growing consistently, except for the COVID years. They have been growing a lot. And as you know, in this, when I told you there is international revenue, there is parts revenue, there is services revenue, all this has basically come and hit into it. And their operating profit margin has gone up to almost 25% right now, which is again quite insane considering the fact that they have a brand value premium. Their revenue have also gone up to almost 4,700 crores. And if you look at their company, they're completely debt free. They have 21,000 crores of reserves in their bank account, which is again very, very, very interesting when you look at it from a larger time frame or a larger macroeconomic standpoint, right? Now, if you look at the con call summary, because we look at all of this when we do our research, in the con call summary, we see that exports are going to see a healthy momentum, because this is also the growth trigger that I was talking to you about, where international volumes grew by 41% year on year, mainly coming from Nepal, Bangladesh, Europe, and Brazil. So these are companies. In fact, Brazil saw a much more better brand engagement and much more growth coming from there instead of just India, right? So their international expansion is coming very, very, very well. And they're also doing some capex again of 1,200 to 1,300 crores in FY26 to build a modular capacity expansion, right? The dividend payout ratio has also increased to 41%. And if you see the dividend growth that has happened in the past, again, it's quite impressive, right? The way they're actually growing right now is very impressive. And now they're launching more and more premium versions to increase their margin, increase their market share, and all the other stuff as well. So this was basically company number one. Now, the second company that is again moving quite aggressively into the future is a company called Mahindra and Mahindra. Now, you would have obviously heard of this company. It is a very famous company, but we will talk more detailed about this as to boss growth kahan se aa raha hai, right? That is our main goal in this entire episode. Now, if you look at this, again, Mahindra and Mahindra has two different businesses. One is the automotive business, one is the tractor business that they have, right? And they are into both these things. And they also have the smaller Mahindra holidays and all, but that is a very small part of their overall revenue that you can actually see. So 69% of the standalone turnover from automotive, 22 from farm equipment, which is your tractors, right? And obviously, right, recently they also did an acquisition. So we will talk about that as well. The revenue has gone up by 17%, and their PAT has gone up by 11%, which is again great. ROE from a group target has gone to 18%. What is ROE? Return on equity. That's also because they're growing so well, right? I mean, they're making a lot of money and their cash is also very rich. So that is why they're growing as well. And if you look at India right now, yes, the SUV market is growing aggressively. And I don't know how many of you all know this, but in 2015, the SUV market share was only 21%. Today, it has gone up to 65%. And this is very annoying because I like sedan cars. I've always been a fan of sedan. And right now, I have one mid-size SUV and one SUV car, right? One Tata and one Mahindra, which is so sad because I love SUVs and not many SUVs are coming out, right? So that is one big change that India is seeing right now. Ek to road nahi hai, but SUVs are there. So that is one big problem. Second, tractor business in India is also doing really well. And here there is also a value shift happening with tractor business. What is the value shift? Right now, all the tractor are internal combustion engines, right? The old school diesel petrol engines. Right now, all the tractors are slowly now moving into electric vehicles. And this is something that you will see a trend happening right now, because recently they bought a company called SML Isuzu, right? Which is in the heavy duty commercial vehicles, which is your trucks, right? Recently, we saw Tata Motor also buying an electric truck company from Europe, which is one of the third largest player in the world. So something is happening, okay? Something very weird is happening. And even SML Isuzu is a big player in Europe. So this is something we need to see what is going to happen in this space. And that is one of the biggest growth triggers in this market also. Now, if you also look at Mahindra and Mahindra, they have something called Born EV. Okay, and I'll tell you what that is also very quickly. But let's look at the business segment mix. Their automotive revenue, which is growing at 18% year on year, right? Mainly coming to their electric business. Farm equipment is 24% of the revenue, growing at 12% year on year. If you look at their last mile, they also do three-wheeler mobility, right? 3 and 4-wheeler, e-rickshaws, all of that, they do that. So that is a small amount of it. This is their three-wheeler and this is their tractor business. Just wanted to show you that as well. Now let's go into P&L and other valuations, right? So valuation is fine at 30p, right? That means forward P will be around 28%, 27%, 27, 28p. The market cap is around 4 lakh crores, right? Very close to an all-time high breakout. And if you look at their growth in revenues, it has been unbelievably astonishing because it has been very, very, very good. And we can see that happening on the road as well, because we see a lot of EV cars coming into the market, and recently they have launched some crazy EV cars like the BE6, the XEV9e, just looks stunning on the road. And this is also all translating into PAT, because if you see their PAT right now from 1,500 crores, it has gone up to 14,000 crores. So 14,000 plus depreciation of 6,000, almost 20,000 crores of cash flow is what this company has been making, right? And obviously their PAT has gone up quite drastically. But one very weird thing about this company is that whenever they make money, they put all of that money into launching more and more products. They actually don't go and clear their debt and all of that. They just take everything and start putting it into growth, right? This is something that we have seen always. And that is why you see here that the entire balance sheet has bloated up with a lot of debt coming into that picture, right? Future growth triggers. What are the new products that are arriving in FY26 and onwards, right? The first thing that is coming out is the new Born electric SUVs. Now, what is Born electric or BEV, right? What is Born electric SUVs? Now, most people, what they're doing, they take the diesel petrol cars, they just tweak it a little bit and make it into an electric car. Born electric is completely designed from scratch to be an electric from the first generation, right? So again, why it matters, because this is a pure EV architecture and gives higher pricing power and lower GST. Every model adds 3-4% mix to the EV mix, right? So this is very interesting. And BEV gross margins are currently thin, but scale and falling battery cost will increase. Now, obviously, you know that they also have a tie-up with Blade Battery, which is BYD's battery components. So again, over there, they do really well, right? So if you look at this, they're coming out with a lot of new products. I think they have said that they want to come out with around 10 to 15 products. Recently, we saw the new BE6 Batman series that came out with only 300 quantity. So that is what they're coming out. So new EVs are coming out in this few years. 7 fresh ICE SUVs, which is your diesel petrol, 5 Born electric, 5 LCVs. All of this is coming out very, very, very soon, right? Now, if I go down and show you the growth triggers, we are seeing an SUV super cycle right now. That means the penetration of these penetration of SUVs are becoming insane, and right now everything is going into that direction itself, right? New models are expected to drive 20 to 30% of M&M's SUV portfolio by 2027 because of the new cars that are coming out, and they're also maintaining a good competitive advantage. And one thing about M&M is basically whenever they launch something, their bookings get almost sold out in day one, right? They get some really, really, really insane bookings. And this was the Batman series that they launched. Now here they're mentioning very clearly that this was an experiment, 300 units of the Batman series. And if this works, they will start getting more and more stuff like this with more and more units. And this is a high premium, high margin equipment, right? So that is where they make a lot of money. Right? Capacity additions, if you look at it, the company has expanded its production capacity with 5,000 ICE SUVs and 7,500 BEVs per month, because there is a problem with demand supply here, that the demand is more and the supply is not coming out from Mahindra. There is a lot of waiting period, waiting time and all of that. So that is basically what is happening. Their farm machinery business, which contributes more than 1,000 crores yearly, is a high margin business, and that is also expected to grow quite aggressively. And here also they're going to go into other places, right? Coming to the macroeconomics of everything. See, Mahindra and Mahindra, you should also understand something is going on in Europe. Tata went and bought a player over there. Mahindra and Mahindra bought SML Isuzu to get a direct entry into Europe. And both of them are going to go electric. I won't be surprised if I see an SML Isuzu Born electric version of a farm equipment coming there as well. So this is something that we really need to look at as to what is happening and what basically is going to happen in the future. Now, if I look at it from a valuation perspective and I compare the top 4, I will see Mahindra and Mahindra trades at a reasonable P. Maruti, in fact, is trading at a much better valuation metrics right now. Hyundai is sitting at an all-time high, and Tata Motors is really struggling with their JLR business. So if I had to look at it, Mahindra and Maruti look like the two players that can actually give some kind of an upside in the future right now, right? So that is basically what it looks like right now. Now, coming to the SML Isuzu, the acquisition that they actually did. So here, if you see, Mahindra rules the 75 HP segment in India, but farmers in Africa and East Europe are looking for 80 to 120 HP tractors for bigger farms, right? So SML already makes that. So now it becomes a full value chain backward integrated for them, which makes it very interesting for this company, right? Again, SML becomes a direct entry into Europe because they already have all the approvals, everything is ready, and it meets the strict rules of EU as well. So all of that is already good. Again, we have the Mahindra technology and SML Isuzu's heavy duty trucks. Both of them merge. I won't be surprised if we see all of that. And also what they want to do is they want to do a new export hub for Africa and West Asia. So right now, if you look at it, shipping a finished tractor from Europe to North Africa is cheaper and duty lighter than sending one from India. So now again, the freight cost becomes better, the landed cost becomes better, the margins become better, and now they start making very nice money as well, right? So these are all the things, but obviously SML Isuzu has gone up quite aggressively right now. Let it consolidate, but from a futuristic standpoint, looks really, really good. So again, guys, see, my job is to come and give you as much data as possible from what I'm seeing. Both of them are futuristic companies. Both of them are doing value migration right now. One is playing the electric game really well, which is Mahindra and Mahindra. The other one wants to go electric, but was always dominated in the ICE space. So let's see what happens. Also, guys, I hope you enjoyed watching this video. And again, I want to give a big shout out to Grow for putting us in the Grow network. So if you have any more doubts, any more questions on investing, you can definitely check out the Grow app in the description. But again, if you like this episode and if you feel some value was given here, then do click on the like button and share this video with whoever you want. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye bye.